Hi y'all, James here, your tax expert online, coming to you from within the famous Houston Galleria. It's a mall, as I'm sure you can tell, so I'm continuing with this virtual tour of Houston. I wound up labeling the last video as 7A, and this is 7B, because I made mention in the last video about mining. And then I didn't really address any of the mining issues because they are quite separate from those who are just holding and trading in currencies. So in the case of a mining rig, you own a rig. You may physically have it like with you on your property, or as is my case, I basically purchased the rig, and it's within a large warehouse. And it's working for me and paying me weekly benefits, and so many of you, I'm sure you know those arrangements, those kinds of contracts. So you have a different set of issues from a tax perspective. We mentioned before that Notice 2014-21 that the notice did address mining income, basically to say it's taxable. Plus, if in a self-employment situation where you earn the income, then those earnings are subject to self-employment tax as well. The self-employment tax, as well as, of course, the income tax, are on an after deduction basis. So you do get to take into account any deductions that you have against the gross income of the mining income in order to determine net earnings subject to both taxes. So, okay, so what kinds of deductions might you look for? Well, now we're kind of in the more typical small business area, and so first of all, your arrangement might actually be not to own it. You might lease the rig, in which, of course, you have a leasing deduction. We would need to see your lease contract as preparers of your return, and we want to then see what payments that you report to us have been made, as lease payments, and we want to make sure that it lines up with the contract that you have. If you purchased it, of course, we need evidence of the acquisition. It's good if you have some record, particularly if you don't have the physical mining rig on your property, some additional information, some sort of serial number, some identification number, as much information as you can gather about the specific machine or machines that you own but are at a remote location. It's better that you have them in your possession. There is a possibility, of course, that if there is ultimately an IRS audit examination, we have to consider that the information that you have, and there always could be the possible that the IRS would want to visit and verify the existence of the asset in the location where you say it is. So it's good to have as much information about that as possible. Don't wait until you're audited, but at the time that you're preparing your first return, in which you are claiming any income or deductions from the operation of your mining rig. Depreciation is a biggie. There is a code section, section 179, that applies that if you purchase, and this is for 2017, the limit was still $500,000. So for most of us in our businesses operating mining rigs, we're not going to be anywhere close to that limit. But you can elect, it's an elective provision, you can elect to write off 100% deduction for the full cost of the rig in the year that you make the acquisition. In that way, if you do make that election, you are quite likely to have run a loss in your mining rig business, despite having cash flow net income. Thus, you wouldn't pay any income tax, you wouldn't pay any self-employment tax in the initial year. There is some thinking, and which I'll make some reference to in the next video, about whether or not you should make that. It just depends largely, like many tax elections, on your individual circumstances. So that's about it, really. We have depreciation. There may be some other, particularly if you are do have the rigs on your property, of course, the big thing that everybody's always talks about is power, the utility costs, and so we would want to have some indication of, say, utility bills before and after. If you can actually arrange it with your local utility in some way that the power could be separately billed with respect to where that is connected to the power source, then so much the better. We just want to make sure that we've taken an appropriate amount of your total power bill into account as a deduction. So there could be many other things as we get into the small business area, and also make reference in the next video to legal entity structuring as also an item from a tax planning perspective that may well be of use in your particular circumstances. So, okay, that's it for now. I will see you in the next video about tax planning, strategy, sort of wrap up the series. See you then. Bye-bye.